Hello, everyone, and welcome to our webinar, State of the Digital Customer Journey. My name is Christina Daniela, and I have with me Barry Delow, Senior Pre-Sales Engineer at Backbase, and we will both be your hosts for today. Before we start the webinar, I want to go through some logistical details. The webinar will be recorded. The slides and recording I will make sure to share within 48 hours after the closing of the webinar. And we will have a Q&A session at the end of this webinar session. And please ask your questions away via the control panel that you have next to you in the GoToWebinar session, or just use Twitter hashtag Backbase. A short note on the agenda. We will have approximately 35 minutes featuring Jim Marous. After the keynote, Barry will help us summarize just in 10 minutes the key findings of the webinar and do the 60-second onboarding, and we will reserve the last 10 minutes for the Q&A session. Barry, would you mind introducing yourself and Jim?
No, not at all. So, hi everybody. My name is Buddy Leeuw. I'm relatively new to these webinar series, but not new to Backbase. Within Backbase, I have worked with over 25 financial institutions across the globe, and specifically worked on proof of concepts and projects that were all about creating and managing these deeply relevant customer experiences across different channels. But yeah, then again, that's all about from my side, because we have a more important person with us today during the webinar. Jim Marous is one of the most influential people in the banking industry, and he's also one of the top 5 fintech influencers to follow. So internationally, he's recognized as one of the financial industry strategists, and he is co-publisher of the Financial Brand. So for today's slides, Jim will also use some sources from the Digital Banking Report, of which Jim is the owner and publisher. So yeah, all of the above makes Jim a great advisor on regular financial topics such as the innovation, the growth of the portfolio, customer experiences, and of course this digital transformation within the financial services industry. So yeah, Jim, without further ado, I will give you the presentation rights, and it's all yours.
Thank you, Barry. I'm glad to be on the phone today because we're going to be discussing something that is, to say the least, near and dear to my heart. It is something that I think is extraordinarily important today to be able to talk about following the consumer as they open an account, as we onboard them, and as we cross-sell them throughout the relationship. And I think one of the biggest challenges we have today is, while as an industry, we've really done a fairly good job of satisfying the consumer who walks into the branch and opens an account, we really haven't transitioned very well with moving the people to the digital world. And so we were questioning, as part of the Digital Banking Report, we were wondering, where are we right now? We see a lot of studies about what the consumer is saying, but we have about 25,000 organizations that are part of our subscriber list, and we thought, why not ask them what is happening on the banking side, and what are we seeing from the standpoint of being able to support the customer journey in a digital way. And so what we want to do is say, okay, so what are we doing? So when we look at the digital customer journey, I think the biggest challenge that we keep on looking at is that while a consumer can buy a mobile phone, set up a data plan, purchase travel insurance, even get engaged with travel today with the major security issues and all that, they can do this in a digital way in a very quick, couple-minute journey. Unfortunately, when it comes to opening a new checking account or opening a new current account, or when it comes to open up any type of account, we are not as digitally adept at doing that. And what's the challenge then is that the consumer is having more and more experiences that can be done completely in a digital way, and we're not providing the same. What do we have is we have a vicious cycle. We have consumers visiting the branch less, which makes it so that, because most of us are not cutting back the number of tellers, the number of branches quite as fast as we should, we're actually having a higher cost per visit. We have fewer branches, and we have declining convenience. So what we end up doing is we're actually moving people away from the branch from a cost perspective, but we have not at all done that well from a customer experience perspective. And that's what we're going to be talking about today, is what challenges are we having in the industry with satisfying the customer as much as we're satisfying ourselves. Unfortunately, the industry, the banking industry, which I've been a part of for several decades, unfortunately, as far as length of time, we're not that much different than we were back in 1980, when we had, unfortunately, the same back office systems in many cases, but we were still talking about CRM, the one-to-one customer experience, and supporting new technologies. When we look at the core components of the customer journey, it's really a collection of several core features, such as the ability to capture applicant data digitally, to be able to qualify the applicants, to be able to verify the applicant's identity, usually through third-party data sources, to be able to provide real-time account funding, automatically creating accounts in the core banking system, and then using advanced analytics to provide real-time contextual engagement. So what we want to do is, most consumers, as we all know, are now shopping for financial services using online or mobile sources. So we do a Google search and we say, look for current financial institutions in my neighborhood. So it's still somewhat based on convenience. And then we do a shopping survey. We may go to social media, we may ask friends and family, and we do all this digitally. And then we say that usually at many organizations, they say, we can open accounts for you digitally. The challenge is they can start the process. What we're finding in our survey that's been written up in our brand new digital banking report is that while we can start the process digitally, we cannot complete it digitally. And so we basically break the promise or the expectation promise with a consumer, where we say we're going to be able to do certain things, we support them in the beginning, and then we don't support them in the end. When you look at the ancillary features, the things that make it so that you can move to a best-in-class digital experience, what we look at is the ability to contextually pre-qualify for and cross-sell additional products. So let's say you just have opened an account, or a customer's just opened an account. Some of the best features are that you can actually use your mobile device to track a person. They can give you authentication to do so, and you can provide them offers based on where they are and what they're doing. So let's say I have an account at a progressive financial institution, and I need to have a loan. Some organizations make it so that I can get a 30-second loan based on the information you know about me and the information they're collecting on a day in, day out, minute-by-minute basis. In the same way, you might have the ability to get an auto loan. So I walk into an auto dealership, and upon walking in the auto dealership, if I have allowed my financial institution to say, give me offers that apply to where I am, I might get, as soon as I walk into an auto dealership, the tracking device on my mobile phone will say, hey, we have an offer for you. If you decide to buy a car here, we will pre-qualify you and we'll give you the lowest rates available. Simply take a picture of the VIN number on the automobile and we'll provide you funding. What you also want to be able to do is have online banking, single sign-on. So what that means is once you've scanned an identification device, that you don't have to put all the information in, that it's pre-filled. You just have to verify that the information is correct. A major issue, and one that is really important, is the ability to save and resume. I'm going to get into this a little bit later, but the fact is that not many people are able to start and complete a process in one sitting, or one walking in some cases, because there might be information that we want that they don't have convenient. So let's say I'm trying to open an account while I'm driving someplace, and they want to see my driver's license and have me scan it. That's probably not the best thing to do while I'm driving. Well, the challenge is if I stop the process at most institutions, they're going to make me restart the process. You also want the ability to have electronic signatures, replacing wet signature cards, and the ability to upload photos to support documentation. So as we look at this, in the survey we did, and what we did was we did a survey in, it was in June of this year. We surveyed over 300 financial institutions globally and got this information. So when we asked them the first question, the setup question, how can you open your accounts and by what channel? We found that 98% of the organizations we surveyed said they can open in a branch. So everybody but the completely digital organizations could open in a branch. When we asked them about their website, 41% said they could open on a website with digital ID verifying and funding. 49% said they could do it with offline follow-up. When we got down to smartphone and tablet apps, a smartphone and tablet specific app, we got down to less than 15%. And what's interesting is even at the major financial institutions, even at the larger organizations, we found that the number did not go very far above 20%. So when I'm looking at a smartphone app for a new account, about 1 in 5 or less than 1 in 5 for organizations as a whole give me the capability to even start a process on a phone. And about 4 in 10 allow me to do it on a website. Now, while we only support it in maybe half the cases, and we only support on the phone for 1 in 5 cases, we find that through other research that 70% of checking account applicants would prefer to do it digitally. 80% of credit card applicants would prefer to do it digitally. So what we find is the consumers, as we've seen in many areas when we come to digital banking, the consumers are ahead of the curve, and we're falling farther and farther behind as an industry in being able to support the overall customer journey in a digital manner. So what we have here is a variance, an expectations variance of anywhere from 20 to 50%. But why do customers visit branches? So we ask customers, why do you visit branches? Well, the vast majority perform activities they can't do online. So what they're saying is, while we keep on saying that customers prefer branches, the reality is more than half say we may not prefer it, but we're forced to do it. And it works in conjunction with the fact that it's conveniently located. What's interesting is the next column, you see it's easier to get things done in person. That is probably not caused by the fact that the consumer thinks they can be done better in person, but because the bank makes it harder to do it if it's not in person. So all of these items here, as far as why they go to a branch, are usually caused by us not doing a very good job of supporting a digital engagement. And again, we have to remember that while most millennials are digitals, and that's a fair assumption, that not all digital consumers are millennials. We're seeing the fastest growing groups right now are in the 50 plus category as far as digital engagement. And again, the people over 50 remember what the experience is like in the branch. They know what they're right now experiencing digitally, and so they make the judgment very quickly that says, you are not doing a very good job of supporting me digitally, therefore I'm going to a branch. When you look at the perceived channel benefits, though, when you look at online and mobile, which are the first two columns, the red one and the light gray one, we find that the majority of consumers, the reason why they go online and mobile is because it's more convenient, it's quicker, it's the best way to do comparison shopping, and it's fastest access to new account and funds. That's perceived benefits. That's not actual benefits, so we're not fulfilling on that. But what it does show is overall, the consumers have a very strong preference and understanding of what the benefits will be if you can move this experience to a digital channel. Not unlike what they're getting with Uber or what they're getting with Amazon or any other digital engagement organization. And that's who's setting the bar for the financial services industry. When we asked financial institutions in our digital banking report survey about the online origination of accounts, we said, okay, if your financial institution provides website app to open a checking account, can the entire process be done online? So going back to our slide earlier, it says it's about 50% allow a website opening. Only 43% of that 50%, so in effect 25% or 20%, actually allow the consumer to complete the process online. So again, we do almost a bait and switch with regard to engagement in the customer journey. We start them off shopping online or on a mobile device. And then when we ask them to get started, we don't allow them to complete the process. In the next slide, you'll see that the mobile origination is even worse. So 20%, it gets to be funny numbers, because what happens is we saw that only about 20% of the organizations had a mobile-specific app to open a checking account. Well, what we find here is that only 17% of that 20%, so basically about 5% or about 4% of the entire universe of financial institutions allow the process to be done completely on a mobile device. How bad would it be if Amazon said, we're going to allow you to start the process of purchasing on your mobile device or on your laptop computer, and oh, by the way, you will have to come into a store someplace to actually get the product or to finish the process of purchasing it. It would be a very bad experience. So what's causing this? What we found is that legacy processes are causing abandonment. So what happens is when we say, what steps of the website application must be handled at a branch? And this is very close to the same with a mobile device. We find that signatures and supporting documentation and ID verification, in other words, the know your customer components, which right now can be replicated in a digital environment, are the major causes for making people visit the branch. What I found to be astounding was the fact that over half of the organizations said that funding had to be done at a branch. This is at a time when consumers can digitally take a picture of a check and deposit it into an account. What in most cases this means is organizations still aren't comfortable with the risk involved with doing a digital deposit for a customer that they don't necessarily know perfectly in person. As I said, it's about the same for this next slide was for the mobile specific app. And what we found though was actually the funding number went down a little bit. I mean, it was only 40% because, when you're using a mobile device, it's a little bit easier to take that picture. But what we found is that the signatures and documentation ID actually made it more difficult. So you had a bigger number there. So when you're looking at the switching channels, and we talked about this a little bit earlier, when you're looking at the switching of channels during the account opening, what we're seeing is that Gen X and Gen Y are much more likely to switch channels during account opening. And that's probably caused by the fact that younger consumers are less likely while the older consumers are more apt to know. But in addition to this, what ITAE found was it's also caused by the fact that Gen Y and Gen X expect a better experience from a digital engagement. So that they start the process digitally, they expect to be able to finish it on any channel they want. They expect to be able to go from a desktop or a mobile portable computer to a phone and back again. Unfortunately, we don't really support that very well, as is shown in the next slide. I did put two graphs on one slide to save some space here. I'd say save papers, that's not the app. But what we see here is both on the left-hand side, we see the website application. On the left-hand or the right-hand side, we see the mobile application. And what we asked here was, do you allow the start and resume? So what you'll see is on the left-hand side, obviously, the start and resume function is about half. When you come to, if I start online, can I stop and resume it online? So about half of people can. But another half said, no, you can't. Now, some of them said, oh, you could resume it at the branch. So about 35% of the people on the website said you could continue in the branch, while only 11% said, oh, by the way, we'll support you on a mobile device after you start the process online. The other part of this was on mobile, which is on the right-hand side at the bottom. What it showed was, if you're starting on a mobile app, which is astounding, is that only 27% could resume into the branch. Okay, so much less than what was online. 27% was online, Only 25%, not much more than what you could do with online, but only 25% could start and resume in the same place on a mobile device, and 56% said you couldn't. Now, what's really major to know about this slide is what really happens in real life, and this is where the journey really gets messy, and where we really find a tremendous disconnect regarding digital journey, and that is a consumer will start the process. They will come in the branch and say, I started the process, how can I restart it? And while they may say that 35% say they can restart an online process in the branch, or 27% can do it with a mobile app, what ends up happening in more cases than not, the employee in the branch is incented by their own bank to say, excuse me, customer, I'm going to try to do better for you. Let me start from scratch so we don't mess something up. And the reason why they say this is because they want to get incented for the sale. So what ends up happening is we start the person in digital channels, we tell them that we want to help them, and then when they come in the branch, we actually tell them, oh, you went the wrong way. Let's start it over again. Now, what that does in tracking, you have no evidence in most cases at most financial institutions that they even started the process digitally. So we say, people want to work in the branches. Look how many accounts we open in the branches. But we don't track the fact that in most of these cases, in many of these cases, the person actually preferred a digital channel, but you don't have any tracking for that. So what are the 9 steps for an optimal account opening experience digitally? Number 1, clean navigation. It's got to be easy. You also want to tell the customer what they need early in the transaction. What you want to usually do is you start with, you want their email address, you want their name, and you want their cell phone number. So that if at any point in this process you have abandonment, you want to be able to get back to the consumer and say, I see you came to us to open an account and we did not serve you well. Let's go through this with you. But we want to know, the consumer wants to know upfront, what are they going to need? Simple data collection, using the photo capabilities on a phone. You want to be able to collect data and replace paper completely. You want pre-population of that data once you've collected it. You want to start the onboarding process, which is very important, because once you have all this information, now's the time to open the other accounts. And because you can pre-populate, you want the ability to not have to go through the processes again. Very important. Number 7, retargeting of abandoned apps. We found that very few organizations did a very good job of retargeting those people that started the process and stopped it. In fact, less than 20% of the consumers were ever contacted again. So you could be losing 80% of the customers that start a process online or on a mobile device. You could lose them and never follow up with them. Think what that could do to your new account opening experience and what your numbers would look like if you actually went after all the people that started and said, I just can't handle this anymore. And what we found in our survey and the research we did, it's actually a 75-page report that goes into account opening, onboarding, and cross-selling all the digital channels. What we found was this was a tremendous opportunity for financial institutions. You also want to be able to move the mobile process to the branch. So you'll be able to use tablets for your tellers and your new account people, so you can actually use the digital capabilities in the branch to make it easier. And you have to be able to fund it electronically. Probably the digital banking report and the financial brand has done more research than any other organization with regard to onboarding. We not only have the report that we just came out with, which is a survey of financial institutions, but we also did a report on the onboarding process. And what we find is, for consumers that are not onboarded, you have a very high attrition rate. So at most institutions that are aggressively looking for brand new customers, the attrition rate can be as high as 40% of new accounts are open because we don't actually onboard them and get them engaged. There's a number of reasons for that. I'm not going to go into it today. But what we found is the negative impact of an attrited customer is about $400. And what that's made up of is the $200 to $250 that it costs to actually get a brand new customer. And a lot of people measure this in different ways and say, well, this only costs us $30. Well, the reality is, if you take it across all the expenditures to get a new account and you put it against the number of accounts you're opening, most institutions are going to have about a $200 to $250 cost of opening. And if a customer leaves, you also have a situation where they have about a $200 profitability loss for the institution that you have to replace now. So when you take this against your attrition, let's say your institution says on brand new customers, your attrition rate is only 20%, which is a good number actually. If you were to reduce that down to 19% and you multiplied that 1% differential times $400, which is the cost of an attrited customer, you're going to find that you can pay for and fund any type of onboarding program you want from a financial basis, because the cost of retaining 1% of your attrited customers more than pays for a complete onboarding program. And we have never seen this. Any organization we know that has started an onboarding program has never stopped it. Onboarding obviously impacts profitability. What we find is that profitability increases from effective onboarding. So what this chart actually shows is that if you don't do anything, your profitability in an account sometimes is as low as a negative $66 US. If you have a somewhat active onboarding process, so you get some engagement, it ends up being about $14 in profits. And if you have a fully engaged consumer, if you have a new account that's open, they are fully engaged on the checking account alone, on the current account alone, it's $146, which is a $212 difference between an inactive and active customer. And this does not even take into account the cost of actually carrying that consumer during the process when they're not active. When we asked in our survey that we just released in August actually, was does your financial institution have a post-new checking account onboarding process using non-branch channels? This was astounding to us because this number has not moved significantly over the last 10 years, and that it's just slightly over half the organizations have an onboarding process at all. I personally find that unconscionable, that we have people making an extraordinarily significant financial decision to open accounts, and we aren't thanking them, which is basically what onboarding does. It thanks them for the business and asks them for more. So just about half the consumers right now are getting any kind of communication once they've opened the account. What's even worse is when we look at those that actually have an onboarding program. So we asked, for those of you who have an onboarding program, how many times you communicate with your customers in the first 6 months? We find that 45% only communicate with their customers 1 to 2 times. And I was talking to the people with Backbase before the call today and said, how bad is that about half of your organizations don't thank at all? And of those half that do thank, about 45% only communicate with the consumer 1 to 2 times in the first 6 months. And what that means is I'm probably getting more communication from your competing organizations than I'm getting from you, and you're the one who I just opened an account with. And in many cases, what we're talking about here is we're not communicating with people that we communicated more before they opened the account than after they opened the account. What we have found is that more contacts are better than fewer. This is J.D. Power's survey that says the optimal number of contacts, and this is contacts from the customer's perspective. So you may have to do it in the circled box, you'll see 5 to 6 times. You may have to do 7 to 9 contacts to get 5 to 6 times the consumer sees the contact. But what we're finding is not only is your cross-sell rate better, but your satisfaction level is better. So what happens is more is better. It's not less. The consumer wants you to communicate with them when you first open an account. And going back a second, we remember here that what we're doing is 45% only contact people 1 to 2 times. When we look at the more to 7 times and the 5 to more times, we see that there's 22%. The 16 plus the 6%, only 22% of the banks out there are doing it what I would consider to be a somewhat optimal number of contacts. There's also the need for speed. what we find is that satisfaction and cross-sell rates go up significantly when you contact within 3 days instead of 4. If you're also contacted, and this doesn't have to be like with a person actually making a phone call, but if it's contacted by the person who opened the account, the satisfaction cross-sell rate also goes up. So what we find is that the faster you contact a customer, the more often you contact a person, and the more it looks like it's a personalized communication. This can be simply be digital. And what ends up happening is the reason why it works out better is that if let's say a branch manager's name's on the letter, the branch manager feels more like they have to get engaged in the overall process. The bigger banks are doing a pretty good job, obviously with the exception of Citibank, as you can see here. But in the big banks in the U.S., what you'll see is most of them are seeking engagement soon after the new account opening process, and they're looking for what we call sticky products. So what this is just showing, by the way, this type of research can be done in any country, and we're seeing the same exact results, is that when people are trying to seek engagement in an onboarding process, much of it is done through SMS, text, and through emails. And they're looking at online banking, online bill pay, direct deposit, rewards, alerts, which is a very good engagement tool, location of branch and ATMs, mobile banking and debit card, and overdraft protection. So what we see is there's about, almost 10 products here that you can engage and seek engagement, because what you want to do is before you start the selling process, you want to make sure you engage with the consumer to get the dating process going. It's not too different than a dating process. What you want to do is say, how do I keep these people engaged? How do I get them committed to my organization quickly and easily? And we have a number of different reports. Our onboarding report, we also have a report on onboarding, our onboarding report, as well as some of the articles in the Financial Brand support, and actually will give you examples of some of these emails and direct mails that these organizations do. And all these organizations that are actually listed here not only use email, they use direct mail as well. They'll also use SMS texts. I know that Bank of America and Chase will actually engage with you on your mobile device, personalized communication based on what you have opened and haven't opened. And so what we really want to do is we want to seek this engagement. We want to make it so that it's easier for the consumer to say, I'm banking with you. So overall, what we see when we just look at the new account opening process and the cross-selling process, we're finding that overall, the banking industry as a whole is falling farther and farther behind the experiences that people are receiving when they engage with any other organization. I don't know how many on the line have actually used Uber, but your first experience with Uber is one of those jaw-dropping experiences. Not only is it simpler than you ever think it would be, but everything's electronic. I remember the first time I got out of an Uber car and thought, oh my gosh, I don't even have to take out my wallet. And my most recent experience with Uber in New Orleans was one where I was able to actually schedule a pickup, and they were looking at my flight schedule, so they were there at the terminal in the pickup area when I got out of the airport, so I didn't have to call ahead. I got in my car. Within 2 minutes of getting my car, I got communicated with Hilton, who also has an agreement with Uber, and Hilton gave me my digital card through my mobile phone. So it basically said, we have now just passed you your digital card to open your door in your hotel room. You no longer have to check in. We've done that for you. When I got to the room, it was already personalized. When I got there, they had a little thank you gift, and it was done by Uber and by Hilton. What was even more interesting is 5 minutes more down the road, I got another ping. It was also set up by Uber, and it was Uber Eats in their partnership with Open Table. And what they did is they gave me 3 restaurants that were near my hotel and said, if you want to get some food tonight, here's some recommendations we give to you. And those recommendations were based on data they had on my eating habits through Open Table in the past. So what happened was I landed, which, by the way, the tickets were bought and my boarding pass was all digital. I landed, got into Uber that was pre-set up, got into the Uber car, immediately got notification from my hotel with a digital card. Another 10 minutes down the road, I got a communication from Open Table on restaurants I could go to. All of that was done digitally, and all of it did not include a banking organization. Now, banks could take over that entire process, but what I'm trying to get to is that the experience overall is not unlike what we're getting at Google, at Amazon, and Apple, where the process is made simpler and simpler. And they're not looking at simply trying to cut costs. What they're actually trying to do is make the experience better for the consumer. So I hope that helps you a little bit. As I said, a lot of the information that we talked about are in 3 different reports, the most recent of which was sponsored by Kofax, was the State of the Digital Customer Journey. And what we did, again, we had about 35 questions that we asked of financial institutions globally about where are they in the digital customer journey. We also have individual reports on ways to do a better job on digital account opening. That not only provides the best-in-class examples, case studies, things of this nature about the digital account opening, but it also provides information around suppliers of that process, and then the guide to multi-channel onboarding, which is definitely the best-selling of all of our reports because of the fact that we've done more research in onboarding than any other organization, and we do know what works and what doesn't. And I guess the biggest concern I've had over the years is the fact that while we develop these reports, we see how everybody's doing, unfortunately, we don't see them all doing as well as we'd like them to. And so at the least, we got to get people to start thanking the customers that open an account. So that's it for me right now. And I know we're going to be going to Barry, and then we're going to be doing some question and answers. So Barry, I'm going to turn it over to you.
Yeah, Jim, thank you very much for this very interesting report findings. My favorite slide was the one on 9 steps for the optimal account opening experience. That's enlightening. Um, for everybody who has asked already in the control panel, the webinar will be recorded. The slides and recording will be shared within 48 hours after the closing of the webinar. We will have a Q&A session at the end, so please ask your questions via the GoToWebinar panel or just use Twitter, hashtag Backbase, and we will be monitoring both throughout the webinar. I already have seen some nice questions come in your way, Jim. I have Barry next to me already prepared to take the floor away. So Barry, here you go.
Okay, thank you. Yeah, Jim, thanks again. For me, that was also quite interesting. My favorite part wasn't the nine benefits basically, but more focused on the fact that financials across the globe really have to realize that they have made minor progress in allowing new customers to simply open an account online, or as you also said, even better via mobile devices, because that's the device of choice nowadays, of course. And I think that is also just reflecting in general on the entire onboarding process and cross-selling activities of the financial institutions. So yeah, I'm not sure if it's based on your report, but at least it's a trend that we see more in the market, and that's also what made us present the 60-second onboarding concept at Finovate Fall 2 weeks ago. And based on that demo, we were awarded with a Best of Show award, which was obviously a great recognition on how relevant this topic actually is, and that we addressed the right set of capabilities for financials to leverage these new technologies that allow you to pre-fill fields, as you said, as one of the 9 pointers. So it's really about leveraging OCR vendors or facial recognition vendors that will make the friction less and making onboardings more simplified and cater for this seamless customer journey, starting on a mobile device, for example, and continuing on the web, or the other way around for that matter. So the concept that I will show you in a couple of seconds actually is really focused on making this great first impression. I mean, we've all been there in the bar. This great guy or great girl is standing in front of us. We get sweaty hands because we know this first impression has to be good. We don't get a second chance. And this is just as relevant to customer onboarding, in my opinion. So as the bank, this is your opportunity to prove that your user experience is better than the others out there. So if you don't do that right, you will kill the customer's trust, and in the end, you might even kill the acquisition. So, and it's also like banks haven't tried to move away from this traditional manual paper-based onboarding process. It's something that can take up to 20 times more resources than a computer-assisted one. But then again, if you look at these computer-assisted onboarding processes nowadays, they are still merely more than an online form. And yeah, we've all been there, I think. We've all been on these forms. We have all had the situation where we had these long forms on the screen and we were leaving because they were just too lengthy and too boring. So what I hope to show you in today's demo is that it is really crucial to obtain this required information from this customers to be in the first steps of their customer journey. And therefore, it's also very crucial to understand, truly understand the customer journey, regardless of the channel, and keeping these customers engaged. So yeah, since a lot of banks are struggling to find this seamless omni-channel onboarding journey, this is where we as Backbase could come in. So without further ado, let me just switch to the demo. As Backbase, we can cater basically for the entire customer journey, and that can start potentially on a public marketing website like these. So this public marketing website shows me a targeted banner where I can use the onboarding process to create my own checkings account. So I'm really excited to show you this. I won't do it in 60 seconds today. This would be a little bit too brief and won't allow me to give you some pointers on the technology. But Finovate released a video of Jouk and Tim, or Jared, presenting this. So that is actually showing that it would be possible to do in 60 seconds. So let's start. So the first screen that we see is, instead of showing this boring form, we are introducing more of a conversational style onboarding flow for this new initial customer. So let's fill out these details. I will be Jared for now. Jared obviously has a social security number. And I need to provide my email address, which is the first type of data that we need to create our prospect account. Because like Jim also said, it's really important that you retarget and re-engage with customers that can potentially fall off during the onboarding process. So I can also provide a password here. And right now we have created a prospect account. And right now we are at the threshold where it will be challenging. This is where the real pain will start, because I need to provide official documentation for know your customer compliance checks. And I have two choices now. I can either continue my journey on the desktop, which will be a little bit cumbersome. I need to have these documents on my desktop. I need to add them via documents uploads. So why not use this opportunity to continue my journey on the phone and actually leverage these device capabilities, such as the camera, to scan my documents? So that is exactly what I'll do. Clicking on the continue on mobile will give me a QR code, and will also say, okay, you can download this Backbase app, in this case, the Backbase Retail Bank app, to continue your journey. So what I'll do now is I will switch to my mobile screen, and I will open the Backbase Retail app. What I'll do next is I will scan this code. I will have to step back a second to get into the next step, where I need to scan my driver's license. So I was already recognized as Jared via the prospect account that I created just now. And via this QR code, it will be retrieved and recognize me as Jared. So instead of going to the branch now, I can continue to provide my official documentation in a complete digital way. So today, I will show you that through this smart scanning technology, we can easily recognize any type of official documentation and automatically capture the relevant data instantly. So it's really super simple. So I will say, I'm ready. I will scan this example ID card that I have on my screen. As you can see, it's going very snappy. And in the second step, I will need to validate my information. So that's all looking pretty fine for me. The second step, and that's more for compliance and archiving reasons, I need to provide the front end of the ID card. So I will create a photo of the front end. So now I have my ID card. But yeah, I could be anybody that found an ID card on the ground and say that I want to open an account with it. So the next step will show an example where we are using facial recognition technology to confirm that I'm actually the guy on the driver's license. So to show this person that I'm actually a real person, I'm gonna need to smile. So excuse my smile for a second. The algorithm of this facial recognition software will say, okay, this is indeed the person on the ID card. And with this, we have closed the loops and the identity verification. So as the final step, I need to accept the terms and conditions, which I can simply do by pressing on agree and providing my signature via the touchscreen of my device instead of using pen and paper. So there's no paper involved. I can press I'm ready and I'm fully identified now. I'm fully identified and verified, but even better, this app is now completely to go. So it's instantly delivered. So now I would like to make it more personal and relevant to me. So I would like to configure my account. So again, instead of making a phone call to one of the branches or going to the branches in person, I can use this chatbot that will ask me the simple questions that he needs to set up my account. So I will answer with my usual balance, and I'm a sustainable guy, so I would like to go green and receive my statements via email. As you can see now, I get a couple of feedback from this Backbase bot thanking me for my process, and I basically made it more personal now. This is my personal banking app. So there's one final step, and that is actually funding my account, because now I cannot actually pay with it yet. So to do that, I will press on the Fund Account button, and again, we will use scanning technology to scan the credit card, provide the data that is on the credit card, and provide my CSV to fully fund this account and make it able to do transfers with. So there we go, we're all set. This is our demo. So as I said, during the Finovate video, you will actually see this in 60 seconds. I will leave that part for now. For those of you that don't know Backbase, so we are really a software company, as you might have been able to tell, that is specialized in digital banking technology. So our platform currently empowers over 90 large financials, so 90, and we really want to help them to accelerate their digital transformation. So yeah, Christina, that's all from my side.
I've already selected some of the questions. We have reached the last section of the webinar, which is the Q&A. I've seen many questions come in via the GoToWebinar control panel. I've selected one for you, Barry. It's going to be the first one just because it ties up to the demo so nicely. You talk about the onboarding solution, but how would this work with our existing systems? I suppose it's a bank, so it's the bank's existing systems. Would it be possible to leverage the investments that they have already made?
Yeah, definitely. I mean, it's a generic concept if it comes down to presentation tiers. Backbase is a presentation tier, meaning that we leverage the data and business rules and business logic that is already there in the infrastructure of the bank and facilitate this through what we've now seen as a very seamless user experience on the front end.
Okay. All right. Thank you very much. Jim, I've also selected a couple of questions for you. I'm going to start with the first question for Jim, and then I'm going to switch back to Barry and so on and so forth. Jim, we've been talking a lot about the measures for banks to make, but can you just summarize for us the main benefits for a seamless customer journey?
Yeah, it's threefold. Number one, a seamless or a digital customer journey, when done correctly, significantly increases customer satisfaction. We're already seeing in the United States that the largest banks, for the first time ever, had the best satisfaction ratings, and it was attributed entirely to the fact that they're further along the digital maturity scale. So what ends up happening is consumers are happier with their digital experiences than they are with their branch or their mobile or their online experiences. We've seen that over the last few years, and now it's starting to show up with regards to who's investing in the digital space. So your number one and key item is satisfaction level goes up. Number two, and we talked about this both on the account opening and the onboarding space, is attrition goes down. Abandonment of the new account opening and attrition after the person has opened an account goes down. So not only does satisfaction go up, but your number of customers that leave you go down. And the third item is a combination of the two. That's where your revenues go up. Digital process is certainly a cost saver, but if it doesn't truly meet the customer and impact the customer directly, you're not going to get the third benefit of the revenue increases, both from the standpoint of less abandonment, but also reduction in costs involved. So what you have is you have a process that's seamless, that's comfortable, and that will satisfy the customer on a much higher basis. Again, customers no longer come into branch and go to 4 or 5 branches shopping for accounts. They're doing this online right now. What we need to do is provide them the ability to open and engage with us in a digital way. And it, as I said, it not only saves costs, but it generates revenues.
Thank you very much, Jim. I'm reading through the questions. I have to select a couple of them. Barry, would you mind helping me out with the next question for Jim?
Yeah,
I've
sure.
seen you're closer to the control panel.
Yeah, and there are quite a lot. So, Jim, another question for you is how important is the bank's website for the customer journey or customer experience?
We find that there's twofold on that one as well. Not only do you want to have an easy place for people to go to start the process of, let's say, shopping. So a lot of organizations now have put up shopping sites that show, give us some information and we'll provide you the best possible account for your personal situation. So you want to do it that way, but also you want to have engagement tools throughout your website for your engagement account. So you want to have something that's very engaging for, let's say, mobile deposit capture, for direct deposit, for automatic bill pay, things of this nature. And what we have found is when you start thinking of it from the standpoint of the mobile consumer, this is where you could put in some mobile videos, some very short form videos on how these processes work. So what better way to teach a consumer that doesn't come into the branch how to do mobile deposit capture than with a short form video? And if you do a short form video, make it so it's really short form, that it's very quick, but it gives the information you need, and you can have it so that it works really well on a mobile device, and then have a place for them to click if they need more information. So the website provides not only the starting point for the shopping process, but provides your jump pages or your link pages for emails that are sent out about the different accounts.
All right, that's a good summarize of this one. The next question, Barry, I have is for you. It's a very relevant question. We've seen some examples of KYC technology in your demo, but how does this relate to Backbase? That's a relevant question.
That is a very relevant question. It's not like we are creating all of these components for ourselves, because a lot of times banks already might have something in use. For example, an OCR vendor, or for example, facial recognition software. Might be rare nowadays, but we are getting there. And in case of facial recognition software, we use these third parties, like many different examples, like Luxant is a very well-known one. And these third parties are then all focusing on that specific core functionality. So they won't allow you to, for example, take another picture of that person and act like you're actually that guy. This is very intelligent software that will determine, based on certain facial points, if this is actually the guy from the picture, as we've seen during the demo. Yeah, so it's third parties.
All right. Okay. Thanks, Barry. The next question I'm going to select for Jim again, just because he's our special guest. Jim, what do you think are the main roadblocks at the moment preventing banks from already having this onboarding process figured out?
I'm laughing because I try to figure out the reason why people haven't thought that thanking the customer was a good idea digitally or non-digitally, even if you use direct mail. I think part of it is the way financial organizations are set up in their silos. In my past, when I worked for financial institutions, the biggest hurdles on the front end with regard to funding. Because what happens is a lot of times you're taking funding away from different product areas, and the worst way to set up an onboarding process is to have certain areas think that because they help fund it, they should have their products promoted. So what you really need to do is you need corporate management, the senior management of the organization, to say, we're going to have a funded onboarding process with a person in charge. You want one person in charge. You want a funding that is not related to any specific products, because you want the decision to be based on improving the onboarding experience and improving the loyalty and retention factors. So I think the biggest part of the process is starting it. And what we have found is that many of your early vendor relationships in the States, because we seem to still be check-based, and most accounts that are open, they get it even if it's a small number of checks. We have found that all the check providers provide the great first step to the onboarding process. Many times they'll do it at a very, very low cost because they get the information, so they can reach out to the customer very quickly with a direct mail and email based on the information that they get. But I think it's just getting started. And I think that's unfortunately the challenge we have a lot with the digital environment, is that we talk really good game, but we don't really get started.
Thank you, Jim. Barry has selected his favorite question to you. I have to let him ask. Barry?
Yeah, please. So this is also applicable to Backbase in a way, but this is the easiest part according to this participant. So he agrees that the legacy systems are often the barrier, and this is something Backbase can solve. But regulations in most of the markets that this person has operated in are in that case the main barrier. So in your experience, Jim, how long would it take for regulations to catch up and adapt to this digital era that we have seen today during the demo?
Okay, and I'm not a regulatory expert, but we have yet to see one market where an organization can't open the majority of the account digitally. Now, there are regulations out there, and it's not necessarily an easy way to actually work through them, but there are a lot of different organizations right now that are doing it. So I get to the question saying, okay, if a lot of organizations are doing it almost entirely digitally, why can't legacy organizations do the same? And it's somewhat legacy thought processes. So in the States, for instance, we have a number of organizations that basically still say that they want to have wet signatures on signature cards. That is not a requirement to open an account. It's not a federal requirement. It's not a state requirement. It's not a banking requirement. But yet organizations say they have to do that. In addition, with the Know Your Customer situation, as Backbase has provided, and a number of other providers have provided, you have a very good way of capturing IDs and doing a better job of filling out information and verifying authenticity more than even if you did it in person. I mean, not only do we see a lot of errors made in the account opening process, but we find a lot of accounts being opened by fraudulent people because a person at the front desk doesn't do nearly as good of a job of verifying ID as your process does. So, again, it is not a set of complete, that it's not something that everybody can do. But the first thing I would do is say, look around your organization or around your country or your regulatory area and see, is there anybody doing what we keep on saying we can't do? And then find out what they're doing differently.
Thanks, Jim. That summarizes it. I have one last question for you. I've been bombarding you with questions, but one last question, and I promise I'm gonna let the attendees go because I promised 1 hour. What should banks start to do tomorrow in order to reach this perfect, exemplary level of a seamless onboarding journey? What is the first step, in your opinion?
I'd love to say that I'd love to get the new account opening from a digital perspective done first. But if I was to say, what do I need to do first? I have got to set up an onboarding process that thanks the customer that opens the account. When I open an account at a retailer, when I do business with any organization in the marketplace, they go out of their way to thank me for my business. Unfortunately, the banking world, for whatever reason, doesn't seem to. And part of the reason, we do know what one of the reasons are, is that once an account is open, we put them in the bucket with all the other customers. And when you put a brand new customer in the bucket with all the existing customers, they show up as being a lot less likely to buy things because they're new, they have fewer accounts, and they haven't done business with you, have not transacted as much with you. So any model that is built in a normal way is going to rate these people much lower. So what happens is we have them on a high intensity marketing rate to communicate before they open the account. They open the account, they're put in the database pool with all the other customers, and we go dark on them. We don't talk to them. And the only way we start to talk to them is if they onboard themselves. So my get it done today mentality would say the thing you need to do more than anything else is you've got to start the onboarding process with a few touches, but move up to 5 touches very quickly. There's a lot of partners out there that can help you with it. Backbase being one of the premier ones because they can do it in a very quick process. But if you set it up, I guarantee you, there's nobody that we've worked with in 10 years that's ever stopped the onboarding solution or unfunded it because it always pays for itself. And I think, Barry, you'd validate the fact that once somebody engages with you on onboarding, they may change partners or whatever else, but they're not going to stop onboarding. It's meat and potatoes or apple pie as far as the things you have to get done. But I would make sure you get that done first.
Yeah, I completely agree with that.
All right, we have reached an hour. Thank you, Jim. Thank you, Barry. We already have 1 hour under our belt, and unfortunately, we need to end this webinar session. If you asked a question that is not yet answered, don't worry. We will follow up via email one-on-one. I will make sure to email all the slides and the recording of this webinar to all the attendees. A big thanks to Jim, to our webinar guest, to Barry for joining us. And of course, a big thanks to all of you for joining us today here live in the webinar. I wish you a great day and thank you very much.